morning, everyone. We are live now, and we will give a minute before we start because we are still gathering. And then you want to go ahead with the opening speech?
Sure, Aita. I'll go ahead.
Yeah, thanks.
Yeah. So just to start off, a very warm welcome to all participants. I am Nilanjan, and I welcome you to the Think Tank Global Conclave for India Growth Story and Meet the Expert series covering detailed management think tank, valuation think tank, IBC think tank, financial reporting think tank, RERA think tank, and capital market think tank as a major part of think tank at the rate Vivek Patra. Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative news update containing slides on sharing latest developments and real-life examples by CEO, CXO, CFOs, specialists, and professionals with global experience. Today, we have Think Tank Multidisciplinary Global Platform special meeting for all the stakeholders in finance, corporate affairs, industry, and profession. We had been in existence since over decades. Idea was conceived around 1991 for conferences, conclaves with CEO, CXO, CFO panelists, and special sharing experiences and real-life examples. Our panelists are finance leaders working in reputed companies or professions since many years and have deep domain knowledge. Due to overwhelming response to our annual report, corporate strategy, and ESG, we have announced 6 P awards and recognition: Profit, People, Planet, Professionals, Promoters, Platform. For corporate annual report, analyst, professional achievers, CEO, CXO with a very fine reputed jury with rich experience in interaction with stakeholders and boards. These recognition and awards would be announced with a rigorous process of scrutiny and choice and interactions with the participant. As a participant, we also launched a much-awaited referencer, appropriately titled Think Tank at the rate Vivek Patra, India Growth Story, a comprehensive conference material compilation of over 600 pages covering experiences by CEOs, CXOs with latest development and series on regulatory matters, frauds, financial reporting, IBC, taxation, etc. We request you all to subscribe to Think Tank YouTube channel for watching summits, conclaves, webinars, and join, connect, and network on Think Tank webinar group on LinkedIn and Facebook pages. I hope you all enjoyed today's session, and once again, I invite all the panelists and member to share their insights. So with this, maybe if I can hand over to Manoj, if you can just speak few words, and then we can start off.
Thank you, Nilanjan. It's indeed a delight and pleasure for me with you all on this special day. Good lineup, lots of developments on the India growth story. We have seen major developments yesterday itself, largest investment coming in the private banking sector, deal done by a top global investment bank, a major merger also with a huge FDI has been approved by the stock exchanges just in the news. And good to see we have among the best panelists and experts sharing their deep knowledge on digital India. We have been having a digital story for a long time, and India is at the forefront of digital India. Digitization of industry, basic level, ground level. There are over 6 million enterprises on the SME front. How they are also benefiting. Lots of experiences are being shared and taken up by eminent panelists. So very interesting lineup. What we have seen, major companies has been announcing results. It's a result season for the year and for the quarter. Good to see our panel speakers are taking up deep dive into each and major relevant development. So great insights and very good lineup. Sanjay is here with us. Gaurav is here with us. And Nilanjan, great insights. Always learning from you on latest developments. So Sanjay, you are there with us?
I can see Sanjay. Hi, Sanjay.
Gaurav?
Hi, everyone. Good morning.
Yeah, good morning. Gaurav, a few words from you before Nilanjan starts his deep dive into the results reviews of a few major companies, and then you take up your session on digitization selected by you.
Okay. Thank you, everyone. Thank you to the Think Tank India Forum for inviting me, Manoj and Sanjay, especially to you. This is very interesting for me. This is my first time at this forum, and it looks like it's a very interesting lineup for today. Honored to be here, quite frankly. Talking about myself, I run a startup venture, which is a fintech company, which helps SMEs, small SMEs in the range of 1 to 10 crore revenue, digitize their daily operations to benefit their growth. Digitization is actually a very, very important topic for discussion, because as you already know that the government is also pushing very hard through Digital India and various other initiatives to push for digitization of these companies, which will actually add about $50 to $60 billion extra to the GDP of the company of the country over the coming years. So I would love to deeply explore this topic, when the time comes for me to talk about it. But really looking forward to this discussion and learning from the panelists here and the audience.
Wonderful, Gaurav. Look forward to have you and your deep experiences and India growth story really taking off with digitization. Sanjay? I think maybe Sanjay would come on later. So let's have the deep dive into the results, some of the major companies.
Yeah, I will start with that. Let me share my screen also. Yeah, so first I thought maybe we'll start with the real estate major, DLF. The real estate sector was one of the sector which had the brunt of COVID-19, and we are experiencing some kind of a bounce back in that sector. So let's say, being a real estate major, how the performance has been in the current quarter and for the comparative period. So if I would come to the standalone financial results, so that's how it looks like. So from a total income perspective, I would say from a current quarter versus the corresponding quarter of previous year, there had been a marginal improvement in terms of revenue. In terms of total income. Revenue from operations has also gone up, but I don't see to be a major variance as compared to the corresponding quarter. From a expense side, I think they are in line with the amount of revenue that we're looking at in the current quarter. Relatively as well, they are in line with the numbers of the corresponding quarter. Profits for the year, they have gone down a bit, right? So 271 crores was in in June 21. We have 244 crores in June 22. Primarily, I would say it is probably because of the expense side, especially in the cost of land, plots, and development rights.
Employee benefit cost has doubled.
And employee benefit also it has doubled, yeah. Right. So I could not see any analyst report or discussion attached with this, but probably if someone has some insights or some perspective, we can discuss that as well.
Well, DLF has been benefiting from the boom in real estate, which has happened post-pandemic. Many people want to look forward for bigger homes to have a better quality of life physically, and also an extra room. And also the cost of home loan finance is at its lows, a multi-decade low, although slightly inching up because of huge demand, but still sub 8% in Indian rupee terms. When in US, a 30-year loan for a mortgage is costing over 5% in dollar terms. So very attractive rates, and DLF has shown massive bookings, record booking for all their new launches. And incidentally, as per the latest reporting framework, the profits come in actually on completion. Earlier, they used to come in on progress method of contracts completion, but there have been some delays by many companies in completion. So on conservative financial reporting framework, profits are coming in on completion, and profits are going up, debt is coming down. Although the company can do significant leverage, but it has opted for lower debt to have a healthy balance sheet. So interesting time, and this has been a leading company in India, a dominant player in the NCR region, and a very, very good lineup of real estate projects, premium projects, commercial. They have a lease model and getting good profits. So sign of excellent results and good order book and profitability expectations in times ahead.
Do they have the debt detail in this?
Debt detail, you will not have a balance sheet this time, but you will have some ratios, Aditya, because this is both equity and debt listed. So you can see some kind of ratios there.
Debt equity is good.
No, and even as Manoj mentioned, if you would go up and see the finance cost, right, over a period of time, it has reduced. So from June 21, where we stand at around 118 crores, in March, I brought it down to 91, and in June 22, it is 76.
That gives me an indication that somewhere around 3,500 to 4,000 crore debt will be there. And if you go down, you have a net worth of 27,000 crores. And that gives you a ratio of 0.13 debt equity.
Yeah.
Okay, paid up debt is also mentioned, 3,600 crores. Are these crores?
They are in crores, yeah.
4 to 5 years back, the company had got huge leverage, and there was a slowdown in the cycle due to multiple reasons, a debt of over 15,000-20,000 crores. So it was a learning in the process, and there were many real estate companies, infra companies, which went through tough times. So the company went into ultra safe mode, cutting down debt. Although real estate infrastructure projects are usually initially funded by debt till the customer decides to come in. So good to see strong companies in real estate sector in India, DLF, Godrej Properties, Oberoi, some of the finest and strong companies.
Sure.
Gaurav, any thoughts from you?
I'm not much of a public markets person, but you can ask me about the startup ecosystem and I can answer those types of questions.
Certainly.
I don't spend much time at all on public markets.
Certainly, lots on the startup ecosystem. And all startup needs real estate also, besides digital 4Gs and 5Gs which are coming.
Yeah, I mean, the question that I would love to hear from you guys about is that a lot of startups and companies are moving to a work from home model. Not entire, even if it's not entirely work from home, it is 70% come to office or 30% come to office, and then the rest work from home. So what is the impact of that on real estate businesses?
So what's the thought? Startups are looking at some physical presence, and which real estate companies they like to go to, or they like to go for rental models or ownership models?
How will that affect demand for commercial like office space, right? Does that mean people will just have smaller offices? So if you could have an office where, let's say if you had 100 employees, you would take an office for 100 employees. Would people now take office space for just 30 employees, even if they have 100, so that they can, call people by turn to the office?
That
And
can
have
be the
bigger
impact,
houses.
but the other positive side is like people will look for a bigger house because sometimes when you have to work from home, you need an individual room.
Yes.
Work. So that way, residential sector should improve.
So
Yes.
Aditya, if I can chip in on that, okay, and since I can claim to be in NCR for maybe 8 or 9 years now, I think the culture had steadily changed, not only because of the advent of COVID, but prior to that also, right? Because of whatever reason, maybe late working hours or both the members are working. So all these builders, they have always kind of created one corner where you can actually sit and work. Okay, so that kind of a mindset was always there. But yes, I think the outbreak of COVID had further supplemented that approach.
Lot of interesting comments coming on the real estate space and insights.
Mhm.
Krishna, appreciate if you want to speak about it, like instead of writing, it will be good.
Yes, sir. Good morning. I am attending this meeting for the first time, actually. I got the link through my friend, Chartered Accountant.
Just put a video on, Krishna.
Yeah.
Good to add face to the voice.
Yes, sir. So I'm seeing that big companies like TCS, Wipro, these companies are moving towards a hybrid model. So they plan to shift some percentage of their work to a hybrid model, and therefore I think the space requirement in commercial real estate in office space will come down a little bit. But as somebody said, because of this requirement to work from home, the requirement for flats with higher living space will go up. So indirectly, maybe the commercial will come down, but this residential will go up. And currently, the interest rates are also at all-time low, and it is starting to go up. And therefore, these offers which all these big real estate companies are giving are also not going to last for too long. And that's my view. And these co-working spaces are also there, where they give this facility, they give the cafeteria and other such kind of things, and they give the one table and seat, and you can just sit there with your laptop and you can do the job. And that is also one model which is now catching up. Instead of hiring complete space, they can take it on a pay-per seat model. So per seat, they will give like an incubation facility and charge you for that. And
Like WeWork.
Yes. And similarly, this board meeting and other thing, if you want, if you are not a big company or a small company, so you can just take it for rent for 2 hours or something. You have some charges like 5,000 rupees or 10,000 rupees. And then you just pay the charges and conduct your board meetings.
Yeah, we do have similar kind of meeting in persons. Like we use this office in BKC, and we gather there once in a month. So like we are looking forward to connect there on 13th of August. Appreciate if you want to join us there.
I am from Chennai, sir. I am from Chennai.
Oh, no worries.
Right. Thank you, sir. Thank you.
Yeah.
Can we go to the next one?
Sure. So next, maybe I can pick up Infosys.
Infosys, Reliance, Tata Motors, many more
Yeah.
results are there.
So I think IT overall has seen an upside, and Infosys, being one of the key players, have witnessed growth. So if you would look at the consolidated positions also, there is a fair bit of improvement on a YOY and a quarter-on-quarter basis as far as revenue and operating margins are concerned. So here if you can also see that as a part of my total revenue, digital is creeping to be the biggest contributor.
The large companies are in transformational mode, moving from legacy business to digital.
Mm-hmm.
And digital business is moving up significantly.
Mm-hmm.
Revenues are going up. Constant currency terms also, revenues are showing good growth, but because of higher inflation, attrition, higher attrition and higher employee cost also, margins are getting impacted. Hopefully temporarily, because they have been guiding margins will come back in a few quarters ahead.
So for them, FS or financial services continues to be their major business segment, followed by retail and communication.
Interesting thing on Infosys is in their call with global investors, they are guiding for a higher revenue growth. In spite of there were talks about recession, which of course now since last week, people are again talking about coming back to growth. But Infosys is benefiting significantly by outsourcing by large global companies. Infosys is among the top beneficiaries.
Sure.
In fact, Cognizant results were, which also came this week, there is an increase in revenues, but the operating margins have got impacted.
Sure. I'll go down. So we can also see an increase in headcount, right, from March 21 to June. So there is around 20,000 odd employees who have joined.
The major IT companies have been on a quite aggressive hiring mode. Although some of the US companies which were in hiring mode, they are going in for a caution on hiring, maybe benefiting from giving business to large contracts to companies like Infosys.
They also have a comfortable cash and investment position, 34,000 crores as of June. Yeah. So the audit report continues to remain clean. There is no matter which is for emphasis or any observation by the auditor, both at standalone and consolidated level. So I will jump directly to the press release. So we can see a steady increase of revenue from operations, a steady increase in the profit also. Maybe from the last quarter, it is a bit down, but from a year on year or a comparative period basis, it has seen an increase. So any comments from your side, Aditya?
No.
Yeah. Okay. Manoj, if you have anything, or else I will move on to the other one.
Yeah, the IT companies are benefiting from a stronger dollar.
Mm-hmm.
So that goes straight for the bottom line, and it will continue to go even on the old contracts. So that benefits the IT company significantly. So Infosys will benefit from this. Of course, there is a talk of, we always talk now in IT companies, cross currency, constant currency, which is a misc about on business which they have from different continents. So intra, there is a lot of differences and fluctuations, but foreign currency derivatives and all, company has come out stronger on that and benefiting from that. So that will add to an uptick in margins for all time to come.
Sure.
Of course, we have seen yesterday appreciation in the rupee. after a long time. But this is because inflows are back. Huge foreign investors are back. FDI is also coming in. We heard about the Yes Bank deal, Sony deal, getting many approvals. So once foreign inflows are back to rupee would also benefit and stabilize. So great results and expectations from Infosys.
Yeah.
Stock continues to do well.
Sure. Okay. So let me move on to the other one, which is Reliance. So Reliance, I think from a news perspective, their Geo platform continues to be a very large contributor to the quarterly performance. That is obviously the next generation. We now also have the new blood who is infusing their competence and significant efforts in spearheading the agenda. So from a revenue perspective, we can see a continuous growth. And also
see a segment revenue.
Yeah, segment. If I come down, segment, yeah.
Yeah. Now we can see digital has grown decent percentage, approximately 25% growth is there.
Yeah.
Over 1 year, but last quarter is almost stagnant. Not much growth.
Yeah.
That was mainly because the entire industry has increased the prices for this telecom.
And also considering that they are the biggest bidder or in terms of money, right, in the 5G auctions, right? So that would be a next feather in the cap.
Revenue is still low. The oil industry actually has seen the price rise.
Mm-hmm.
Oil and gas is good. From 797 to 2736. Interesting.
Yeah. Any comments from anybody else? Manoj, maybe if you want to add something.
Well, this is a record year for Reliance.
Yeah.
In terms of turnover, in terms of bottom line, much beyond expectations. The GRMs were at the highest. The company has been beating the Singapore benchmarks for margins because of the high efficiency of its plants. So this was a unusual quarter with a huge rise in the margins and increase in also petrochemicals end products because of higher input cost. Company has been a big beneficiary. Also, it's oil exploration business, which has been very small, but has shown a very good uptick on a YOY basis. Production is being ramped up and oil fields have become profitable. So money is coming from there. Even on Reliance Jio, there is a growth in ARPUs. ARPU is a main indicator for profitability, which earlier there was highly competitive pricing. Now ARPUs are moving up, as well as the number of customer count has also moved up in Reliance Jio. And what we see in Reliance Retail also, significant new store additions and growth happening. So Reliance is actually firing on most of the cylinders, whether it is petrochemicals or refining, oil to chemicals, on telecom and digital, and also huge expectations on their media business, with some announcements is there on tie-up with some global investors. They have announced also aggressive plans for IPL. It is there in the quarterly about they have won the bid for the next broadcast digital for platform for IPL, the cricket matches, getting into sports. But somehow the company has not been able to perform as per expectations on their media and broadcasting companies. Many people are wondering why. But maybe the management needs to get more tuned to investor expectations on getting returns on the huge investments. Even FIs have done huge investments in the media companies. So that performance needs to improve. There is a talk about succession planning by the companies management. It is happening in some of the companies. We have seen a new chairman in Jio, and oil companies doing well. Aramco is doing well. There are lots of expectations on investment by Aramco and O2C business, oil to chemicals, for which there has been a big demerger. Not a demerger from a listed company, but a separate company has been formed, which can bring in foreign investments. So people are waiting for announcements and investments in O2C space also. So interesting times. There are very high expectations from Reliance, particularly since Adanis are moving up in growth and market cap of their companies. So why Ambanis are falling behind is a question mark in many investors' minds. So is it temporary, or the gap will keep on becoming bigger and bigger? And people are also looking at listing of Jio and retail when it happens. Would be how the listing will happen? Would there be demergers? Some announcements are expected soon.
And also on the retail, Manoj, I think one of the strategy which did not pan out the way they expected was the taking over of the leased assets or the outlets of Big Bazaar, right? So now, since Future Group itself is heading towards insolvency stroke bankruptcy, we can also look for we can only guess that they also come up as a bidder for these projects, and maybe we can see those businesses coming into their fold.
Yeah, that has been a very interesting turn of events as far as retail business of Future is concerned.
Yeah.
The company needs to improve the corporate governance perception at least.
Yeah.
One valid point which is mentioned. I don't know, Nilanjan, have you read it? Like, I didn't go through the financials detail. Definitely with this Russian crude coming at a discount, and that is impacting the crude oil price, the GRM, what we are talking about. Predominantly, I remember the GRM used to be in the range of 9 to 11, and now it is coming as 17. And that 17 is just the last quarter, I think the growth is. How much will be the crude portion of the entire cost, which is coming from Russia crude and the other?
No, I don't think you will have a geography-wise bifurcation
Yeah,
here,
correct.
Aditya, because that will be a sensitive kind of information for the entity as well as from a country perspective. I don't think they will be mentioning it anywhere. But yeah, it's a fair point. The government has also imposed windfall taxes, right? So yeah, that could be a booster for the margin. I don't deny that.
No, I was just reading
Both
this
Reliance and Rosnell.
comment in the chat box,
Hmm.
wherein it was about mentioned that this may not be sustainable on
Yeah.
account of Russian crude. The benefit what we are getting now probably will be gone after a year
Yeah.
or
So
earlier than that.
yeah, so that's why it is windfall, right? So that's how the government has, optimized its capability to lessen the CAD, current account deficit, right? So let's see.
But interesting how Reliance and Roswell both could gear up immediately and get benefit uh, uh, of the benefits from this Russian situation and get crude at a huge
Sure.
discount and add to profits. Both the
Yeah.
company benefited, and
Yeah.
Reliance is in a listed space. And although now there is a retracement back on that windfall tax
Mhm.
because the stable policies are important, but the company continues to benefit from the discounts and would add to its bottom line and hopefully step up its oil and gas production, on which there has been high expectations. It's very profitable now.
Sure.
So
Sure.
another line of old business getting revived.
Sure. Good. Any other comment from anyone, or else I will move to the last one.
Yeah, we can move to the last one because we are running short of time.
So quickly, I think out of this four, Tata Motors is the one where we have seen a reduction in performance from a year-on-year basis and also on a Q-on-Q basis. So that's a brief snapshot, both in terms of pound and also in INR. Yep. So if I go down directly to the results, so from a revenue perspective, probably from June 21, we can see an increase. Okay, but I think the supply of chips and semiconductors continues to be a challenge for the overall auto sector. We have some kind of a exceptional item which came in March 22, but this quarter there is none. So that's the reason we can see that the company is back in red in the particular quarter, right?
Do you have the segment reporting here also?
Yeah, we'll have the segment. Is this standalone or this is consolidated? Yep.
This is standalone, right?
Oh, this will be consolidated. Or this is standalone. Let me just check. No, I think it is consolidated. I think it is consolidated. Yeah.
They have not segmented based on EV and non-EV vehicles.
No, I think the way it works, Aditya, is that as far as the accounting requirement is concerned, it is directly driven by how the entity reviews its performance. So the standard gives enough flexibility to give the information based on its own performance measure. But ultimately, there's a requirement to reconcile all these numbers with the financial statements. So you will not find one uniform way of presenting the information. It will be more company specific.
Is there anything that's specified about EV?
EV?
Somewhere?
I don't think so.
Maybe you can
No,
search with
nothing.
electric.
No. Nothing. So there maybe we can find something.
That these are just details about
Yeah.
business.
Yeah. But nothing on how they are contributing to the.
Yeah, still the contribution is low as
Yeah.
these vehicles need to be charged with the electricity which is produced through fossil fuel
Sure.
or coal based.
Good. Manoj, you want to add something?
On the global front, company is going through a huge transformation, particularly on the JLR. There are two factors. One is China COVID lockdown impacting business, and also the shortage in chips was impacting production, although there was huge demand and order book for JLR. And on domestic front, there has been a huge transformation, what Aditya mentioned about EV and passenger business, whether in terms of four-wheelers, passenger cars, or in terms of public transport. Company is a big business in buses, EV space, getting big orders from transport corporations. Lot of new latest sleek models being introduced. There's a massive transformation going on, which of course in separate interaction, the company gives brief details, but we need to see more on reporting financially on the contribution on EV space, so we can look at the growth. What we saw, digital story in Infosys, it gets reported as a separate segment. Earlier, it was all related to offshoring and computers, but digital is a separate segment itself in reporting. So we see the growth in that segment. What is the new trends? So here, sooner or later, hopefully sooner, we should have separate financial reporting on EV, because the growth is quite significant in as far as we can see from advertisements which are coming in for cars or even for buses, where big orders tenders are being floated and the company is putting in tenders for large orders for buses. But we are seeing India participating in the EV space, and we are not much behind. There is a lot of energy in the management to move forward in the EV space, eco-friendly space. And where, of course, the challenges in terms of charging stations and the period required for charging, we need a significant change, but things are happening. Even the group company Tata Power is helping to in that business and building up the ecosystem.
Yeah. Good. So then maybe we can wrap this.
Yeah, Gaurav, some thoughts from you on the changing landscape in the global front.
It's very interesting. So if you take the example of a company like Infosys, okay, so they have gone through maybe 2 or 3 periods of transformation. So when they started, they created leverage through labor, right? Labor arbitrage. So they were basically saying that, come do business in India, we're setting up these BPOs and software solutions and such things, where it was basically, leverage through price sensitivity of the foreign customers that they were servicing. Then it moved on to leverage through capital, where they created large pools of capital and started to market themselves across the world and grow their business, right? And now they're in a stage where they're creating leverage through productization, right? So a lot of these guys are moving away from they're just talking about the labor or capital differentiators to saying that we have a product which actually serves the needs of, whether it is on the cloud or whether it is something else. But it is, and that's actually true of every industry or even as an individual. If you are a finance professional or you are a doctor, the way for you to grow your business or grow your income, first you start with, yourself, and you hire more doctors or other finance professionals under you. You start to grow through labor, right? And create leverage. Then you need capital to grow further from there, right? So you find ways to infuse capital in the company so that you can market better, you can have better reach. And the third is that, you've acquired some very specific know-how, which you can then productize, right? So if you look at even, say, doctors who become extremely successful, they've, moved on from, maybe running a practice to starting, through their research or through their, experience, created, let's say, a laparoscopy or whatever, right? Which becomes productized. It's very interesting how, this journey is evolving in every industry.
Well, that's true, Gaurav. I think digital is the flavor, right? And we are heading towards that. So Manoj, if then maybe we can invite Sanjay to speak a few words and then take off this next topic. So Sanjay, if we can see you on video, it will be great. And just take us through the topic which you have in your mind. Sanjay? Manoj, I don't think we have Sanjay with us.
I think connectivity issues are there.
Yeah.
We'll be back. Yeah, Gaurav?
Yeah, so, I will share my screen and talk about my topic. You can just give me one moment. Is my screen visible to everyone? Hello? Is my screen visible?
Yeah. Yes, Gaurav.
Okay, thank you. Essentially, the topic that, I'd like to explore with this group today is on digitization, the opportunities in it, how do you bring about digitization, and let's have a dialogue about it. I am not a lecturer or anything like that. My team may say otherwise in my company, but largely I stick to dialogue. So please feel free to send in comments or questions as we are talking. And I would love to learn from all of you as well. I don't think I am as much of an expert at this as probably other people out there. But I have spent some time in the startup ecosystem. In 2009, I started a fund which was investing in early stage companies. We invested in a bunch of companies with the goal of helping them digitize. So one of the businesses, for example, that I invested in was called cartrade.com, which actually went public a few years back, and is the largest car marketplace for new cars and old cars. And essentially that business is around digitization. They took this whole ecosystem around the used car dealers and digitized the way that they worked, right? So they helped them be more visible online so that they could sell the cars which are sitting in their showrooms. They helped also by getting leads from other people wanting, like you and I, wanting to sell our old cars. They came and saw the cars and bid for them and purchase them to have good cars in their inventory. So, digitization has, so many different branches to it. There is a complete horizontal digitization, which is, ERP systems, for example, right? There is vertical digitization, which is things like installing a CRM tool. Okay. There is a dealer management platform that I just mentioned. Or even small things like, having presence on a LinkedIn or IndiaMart, where you are able to create business opportunities. These are all, some forms of digitization, right? Some of them are a little bit more superficial or on the surface, and some of them are core digitization, where you actually take the business from inside out and embrace the benefits of digitization with the tools that are available to you. Okay. And it is something in the direction of the world is in that the world is heading in that direction. So companies in the US, SME businesses specifically, there is 100% penetration of SaaS businesses there. Okay. Like literally every small business there uses SaaS products. It can be for things like communication tools like Slack, if you guys might have heard of it, which is the new, which is the advanced format of email communication, I would say, right? Or it can be managing their leads on something like a Salesforce, or hiring people through a platform. They have team management and task management on platforms like Monday or Trello. So there's a lot of digitization tools which are becoming available. And when we talk to, investors in India, the sad thing is that they actually take Indian products and they always look at markets abroad and say, Acha, this product you have created in India, but we don't think in India people will pay for it. So why don't you position it as a product that can be sold in, North America or Europe or Middle East? Because people over there are already in the habit of paying for software, but in India, people don't pay for software. So, there are those challenges in the ability to scale. But nevertheless, we believe that digitization is going to be a massive force in India. It is going to help companies in India become more profitable. It's going to help them reach their full potential. And whatever the pricing model is, it probably will get figured out. So I'm just going to start with this first slide, which I think we won't spend a lot of time on. But if you look at the typical SMEs in India, the operations are highly manual in nature, right? So for the purpose of this discussion, I'm saying that let's look at companies between 50 lakh rupees in revenue annually, going up to say 20 crores, which forms quite a large chunk of the 60 million SMEs in India, right? I would say at least 10 million companies probably would fall under this category, where it could be a sole proprietorship or it could be a partnership or private limited company. They would I would think number to 10 million, going up over 6-7 years to maybe 20 million. And a lot of these companies are not really on the cloud. Okay, their financial systems are mostly managed through Tally. The billing is done manually. A lot of them use Excel, or a lot of them use Word templates or Tally to create an invoice, send it to customers by email, or print it and post it. The payments that they receive are done collected by check, right? Now there is more prevalence of UPI or NEFT, which has come in. Again, you need to reconcile the bank statement to know what money has come in and who has paid. The financial records, expense slips are given to the chartered accountants or to the accountants, tax consultants, to create the GST filings and TDS filings. Again, a lot of papers are exchanging hands, right? And to view their, daily sort of important financial statements, important KPI metrics, the business owners are typically just talking to the accountants or, getting emails about, how much money has come in, how much sales happened yesterday and things like that, right? So, it's a fairly circuitous way of doing business. It creates a lot of inefficiencies, right? So what we found, right, these are all actual examples that we've seen, that due to these old processes and trade practices, we see, a number of challenges that are faced by companies, right? So for example, take this first case study of an electrical trader, right? So he has to stock items to be able to sell these during, on a daily basis. And, he doesn't get supplier credit. So he has the limited ability to buy items, right? Because there's his own money or some money that maybe he gets from banks. And he runs out of stock, right? Loses out on sales, right? And he ends up even owning slow moving stock because he just doesn't have as much transparency in knowing what's moving as fast, because the analysis is not available to him easily, right? Take the example of, a software business where they have field sales teams. Okay, so they have 8-10 field sales teams going around the market, talking to people, building software solutions for them, There are, you have to monitor the productivity of each sales executive. Again, now this person doesn't find it very easy to analyze the sales performance trends of each individual, each geography, which customers are paying how much. It's a tedious process if you are following it in the manner that I described earlier. Or the individual that I mentioned over here, that this on the right hand side, that a car rental company which deals with corporates who require cars to be given to them for their executives. These companies are quite infamous for giving for their payments, right? So their payment cycles go to 60 to 90 days because they just don't value, a car rental business as much, I guess. So there is a lot of delays in payment collection for this gentleman. He again, struggles to make ends meet because his business is entirely run through rotation of capital. He has to pay installments for the cars, the driver salaries, obviously rent for office and sales and other things, right? So overall, what we've seen is delays in payment collection is the number one problem. Inefficient inventory management is 2, and access to credit seems to be number 3, right? And all of this leads to, missed sales opportunities and poor management of working capital. So SMEs need change, okay? There is no doubt about it. They feel that every day they go through these problems. Every day they feel that, I wish I could do this better, right? But there is a big but over there, that they don't know what to do about it because they just do not have enough wherewithal, enough resources or knowledge that how do they solve these problems, and how do they solve these problems using technology, right? So what there was a report done by IDC on digital maturity of SMEs in India. And the biggest challenge that SMEs in India face is that, number one, they don't even know where to start if they want to start looking at solutions which help them digitize their operations and make them efficient. Okay, they actually don't know how to start and where to start. Unless somebody actually comes to them and tries to convince them, it's very difficult for them to actually figure it out. Number 2 is that for their specific solutions, a product being available in the right category or the right solution point, right? So SMEs typically would want to have one product which can solve a broad range of solutions rather than go for point solutions, so one problem solves, let's say one solution solves for receivables problem, another solves for payables problem, and another solves for credit problem. They would rather have one solution, right, which takes care of these things, because there is a learning curve. There is also the integration of all of them, which typically doesn't happen. And there's lack of talent, right? Because there is people who they employ typically find it hard to use technology or maybe averse to technology. So these are the challenges that we have seen for SMEs to want to digitize. And there are solutions, right? There are ways to get around that. But most importantly, what they say is that 63% of SMEs want to automate the collection and formatting the inputs to expense systems. They want to reduce manual errors, right? And 53% of them said that there's a lot of errors in their business reports. So they feel these problems, they feel the effects of them, they feel the inefficiency, but it's just very hard to figure out how to start. So KPMG did this study, where they talked about, they tried to understand what happens when an SME business is using more and more technology. So, for example, a completely offline business and going up the curve to a fully engaged digital, digitally managed business, right? So as you can see here, the higher up the curve that you go in managing your business using more and more technology, the growth per year of the business goes up from 11% to 19%, right? And in India, only 2% of SMEs qualify in the fully engaged category, whereas most of them are still offline, and some of them fall in between, which is enabled or connected, where they're using some technology to enable their business to be more efficiently managed. Okay. Now we also had 2 years of COVID, and that actually has woken up a lot of the SME community to technology. There was no choice, right? And the number one driver for using technology became business continuity. Everyone during the pandemic and lockdowns had no choice but to use technology, especially to collect payments, to get orders, to know where to deliver the product, right? And even to make payments, because banks were shut, and how would you make payments? So the first thing they're looking for is business continuity, and then better collaboration across teams, because people were working from home, and which seems to have become a new norm in the market, where people are widely working across homes or different offices, etc. For example, I know that Paytm had announced I think some months back that their entire office is going to be virtual from now, and every employee basically can work from home, and at the most they should have a co-working space near them where Paytm will pick up the tab for the monthly membership. And a lot of smaller companies are doing that as well. Our company does it too. We ask our teams to work remotely and get them in twice a week on rotation. So these are the things which have really woken up SMEs to start using more digitization. And with the advent of a number of other areas, they are more and more likely to adopt tech. We polled a lot of SMEs as well, and found that managing working capital is the number one problem that they face. So despite the MSME payable being mandated at 45 days, a lot of these guys do have challenges in collecting those payments. And lenders are now partnering with fintech players to reach the wider sort of base of SMEs, so that they can lower data collection costs and disburse loans to SMEs more efficiently and successfully, which is also driving adoption of technology in their businesses. So how we look at this opportunity, suppose, if we talk purely about, working capital enablement being one of the major goals of digitization, is that the total SME demand for loans in India is about $1.3 trillion, right? This includes CapEx, and it includes working capital requirements, of which about $1 trillion is the contribution of SMEs to India's GDP, right? And growing, of course. $500 billion is the addressable deficit in the market for SME financing. Okay. The way to address this deficit is by getting more and more people online, so that their data is easily exportable between the company and the bank or the NBFC, in order to underwrite and create a new underwriting model, so that you have live data streaming in. Okay. So India has started this invoice discounting platform that you may have heard of, called Trends, where the supplier, the buyer, and the bankers get onto the same platform and make transactions go through seamlessly, where the invoices between the supplier and the buyer are authenticated, and the suppliers are approved by banks and NBFCs to provide loans against their receivables, against their payables. So in India, this market is only about $6 billion today, not the market, sorry, but the $6 billion of invoice discounting is happening in India today, which is nothing, frankly, 0.2% of GDP. Whereas in other countries, it is as high as 60-70%, right? So you can see how much growth opportunity exists in India just through that. So you might have already, you might be already aware of this, but SaaS adoption in India, through the reasons mentioned earlier, is reaching this inflection point, right? So the government is already pushing for e-invoicing to be done for companies of rupees 5 crore revenue annually and above. So every year they have lowered the limit, the threshold limit for that revenue. And now from Jan 23 onwards, it's going to be 5 crores. So pretty much every SME which needs to file GST is going to have to adopt that. So that is going to force them to use this. The government has many other programs like the accounts aggregator, the payments aggregators, digital locker that they have, which is also creating awareness in this community that it is, digitization is the way forward. There is the demographic dividend in India, which we all know. The age group, the average age in India is 28 years, which means that the young Indian population, which is going to be entering the business field, is going to be far more tech savvy than the previous generation, which did not grow up with technology. Of course, increasing internet and mobile penetration, thanks to the efforts of Jio, which lowered the cost of data and put phones in the hands of 900 million people in India, has created a ubiquitous nature of the presence of technology. And post-COVID, we already spoke about it. More and more SMEs are moving towards using cloud-based solutions to manage their businesses in various ways, right? This is also supported by the investment in India for SaaS companies, which has gone up from $1.7 billion in 2020 to $4.5 billion. It's also worth noting here that this $4.5 billion that has gone in, a lot of this investment actually is targeted at technologies which enable, which is marketed in other countries. So the technology might be created in India to be sold in North America and Europe, like I said. So there is, a little bit more of, I think, skepticism in the venture community about how Indians and Indian businesses will adopt technology or adopt cloud solutions, and also the ability to pay for it. They can adopt it, but they feel that they will not pay for it. So what does it look like if we digitize more and more businesses and the flow of capital between them, right? So we've just taken our example here, where we are creating an integrated business model, platform, where accounting data from Tally, payments information from payment gateways, etc., invoicing platforms like our own or others, and lending filters from various banks and NBFCs work alongside each other. So in this case, the company itself can manage faster collections by integrating with payment gateways and sending invoices on mobile phones and WhatsApp, attaching payment links. They can also manage the receivables better in terms of being able to have better view of what is pending in receivables from various people without relying on any intermediaries, to have view to this on your own on your mobile, optimize working capital, and have better financial visibility. On the buyer side, you can actually show analysis, or your supplier has better analysis of how you have been paying and perhaps provide you credit. Payments are simplified, and all the reconciliation that you need to do for how many bills are paid and how many are not becomes a lot simpler. On the supplier side, again, very similarly, you can see which invoices have been paid and what's not. You can set up credit controls to either give higher or lower credit to certain people, and you can partner with banks to provide credit to your buyers, so that the banks can pay you through invoice factoring, or they can offer other types of credit solutions. Most importantly, the lenders can actually lower their cost of underwriting. They can improve the credit models because they have transactional data which is streaming live, and create new credit products for SMEs, based on the industry segment or based on their behavior. So what we've done, this is a case study of our own, where the clients that we work with were actually influenced by finance professionals. So, India obviously has, hundreds of thousands of finance professionals like chartered accountants, tax consultants, CFAs, etc. And we work with them to give an introduction about Slate to their clients, and give them a 14-day free trial to use our product and see if they feel any benefits accrue, and then they can continue using it. So by doing this, what we saw is that 1,500 finance professionals started to work with us, and invited, hundreds, actually thousands of clients, of which 10,000 clients actually, created their accounts and started to use Slate. So the lesson over here for us was that where something like finance is concerned, using influencers such as finance professionals is a very important way to get SMEs to understand and trust the product. It did not increase the burden of the finance professional. They just introduced the product, through email, and the rest just takes off from there. Our team just follows up. So, there is a role of many people to digitize India, as we call it, right? There is the government, there is finance professionals and other professionals in various fields, probably depending on which category the product is in. And there is the role of the SME being a little bit more open-minded to trying something new. So our belief is that, over, the next 5 to 10 years, we're going to see, a number of players who are going to push for digitization of these businesses through various types of SaaS products, through various types of cloud solutions, to solve their immediate needs. I don't think SMEs have patience. So they will want ROI at the fastest rate possible and in the fastest time possible. They want low learning curves, so you cannot spend 5 days training all their employees. And the onboarding time needs to be 5 to 10 minutes. If you have to do onboarding which takes 30 minutes, 60 minutes, the data is somewhere which has to be copied and pasted and all of that, that's not going to work. So solutions which are created for SMEs in India need to follow these principles, and that's been our learning. So this is basically the topics that I sort of pre-prepared. Would love to kind of stop here, answer some questions, engage in some dialogue.
Do we have any questions from anyone?
So Gaurav, I don't have any question per se, but since we're talking about digitization, the flip side that we look, at least from the profession that I am in, is the challenge on monitoring and enabling a trail so as to um, find out the journey of the entire transactions, right, from a financial point of view. So what I would like to highlight is that from 20 to 23 financial year, any company in India, which is having an accounting software, okay, uh, has to mandatorily have the feature of audit trail.
Yeah.
Yeah. So so since the provision has been deferred for the last 2 years, I am hoping that from the current year that provision ultimately sees the light of the day. But I thought I will just pick your thoughts, right? Because it will become applicable from the next year. But are the companies or the people that you are meeting or the professionals that you are interacting, are they initiating those kind of a dialogue with their entities or with their audit companies? And how do you feel from a data perspective? Because if I have to talk about maintaining a trail for each and every transaction, I can only imagine the number of gigabytes and terabytes of storage space that would require, because you will ultimately need to be storing those data also for the next 8 years at the minimum.
That's right.
Right. So maybe you can just share some thought, because I'm also very keen to hear, how things are actually moving on the ground.
Yeah, it's a very interesting question. So what we do is that we provide a document management interface on our product. Okay. And when we show it to the finance professionals who work with us, they love it actually, because they can actually see all the documents in one place. One of the things that they have come and asked us is that, can you tag each of these documents against the transaction? So when someone is doing audit, and say they're looking at an invoice or a transaction, they can actually see all the documents associated with it.
Right.
And you mentioned about the data requirement and the storage requirement. So we provide 1 GB of storage to them, and any additional storage needs to be purchased. Exactly for that reason, because you need to store that for like 8 years.
Yeah.
So, and people are quite mindful of that. So whenever we deal with a CA business or CA practice, one of the features they do like is document management.
Okay. So since you spoke of Tally, I think I was going through some newspaper articles which is there in public domain. Yeah. From the day this new so-called provision is being brought, Tally had been in the forefront, of positioning itself in the market, because somehow this particular platform is looked at by SMEs as a financial reporting package. So one of the things that they came out with is that they will come out with a report, right, for every transaction that you modify or change.
Yeah.
They would kind of have that feature in the software which will show, there was a change, or there was the data earlier. This is the change, and this is how the revised transaction or the revised whatever looks like.
Right.
Yeah.
So we're actually a presentation layer which integrates with Tally, right? Okay. So we don't try to replace Tally anywhere. We know the prevalence of Tally across this ecosystem, and especially the finance professionals are not keen to change their behavior at all. So we support whatever they do. In fact, we work very closely with Tejas and Abhishek, Tejas Goenka and Abhishek Dalmia, to be able to take views and help for their engineers actually to create better and better integrations.
Yeah. Thank you, Gaurav.
So are most people here sort of CAs and auditors, or are people also running businesses which are in other areas?
So I think it would be primarily from people from a finance field,
Okay.
right? So I'm not sure, maybe Aditya or Manoj, if you can just highlight on that aspect as well.
Manoj, you're mute.
Gaurav, what do you feel is the size of the market opportunity in the immediate term, which you are addressing?
So if you look at the Indian market, so there's about 2 million Tally licenses out there, okay, in the market. So first opportunity is to work with that segment of the market. There are various sizes of businesses on Tally, from small to large. So if we take, let us say, take out 50% of the market, which may either not require the product or, is too small or too large for us. I think, there is 1 million SMEs that could be targeted by us. And we do this, pretty efficiently, like I said, with finance professionals, with resellers. And we think that going forward, we will also have a version which will be a standalone product. It will not be an accounting product. It will be, something which will facilitate invoicing, receivables management, and inventory management, which are the core features that a lot of these businesses require. And then we can expand into, the non-Tally segment as well. And there is the foreign segment, right, which is the Middle East or Africa or Southeast Asia. What we see is that a lot of businesses which are running, which are distributors, and they have frequent transactions between themselves and their wholesalers, retailers, they are very, very keen for products like this, and they want to give it to all of their stakeholders. So the opportunity we feel is that for every company in India on Tally, we can help them with this product, and not just with working capital, but also to provide credit. So we are introducing credit from next month. So companies will actually be able to, avail a loan very quickly. Maybe in one day they'll get the loan.
And what you feel is the time taking, because it's a long haul. You're looking at a huge opportunity domestically. You said over 1 million clients. Then they expect on-time service also. Then there are lots of service issues in these areas. Lots of service issues. We have even seen a large company, Infosys, looking at the portal. And still, after more than a year, things are yet to stabilize. Very complex issues, and they are not able to address it. And like today is an important day for that. Tomorrow is the last day. But there are lots of glitches. And actual help is required for the market segment or the professionals or users you are addressing it. In terms of immediate service, solutions to the problems. Basically, solutions to the problems, addressing that creates a lot of value. And sustainable growth. How do you see this panning out?
So Manoj, we actually have a very distributed model of sales. We work with 600 resellers across India. So from all the way from Kashmir to Kerala, we have distributors and resellers. So resellers are empowered to help clients and provide customer service. And when they cannot do it, then they escalate it to us. So right now we're still not that large, so we're able to tackle it fairly well. As we scale, I think we will have to have the resellers just get better trained, because we give them a very hefty margin for the product anyway. So it's through this approach that we think we can solve the problem.
What is your dependence, if any, on call centers as of now?
So we do have our customer service team. Usually the clients can reach out either to us or to the reseller. What we see is most clients, if we have onboarded the client, will reach out to us if we have had a direct relationship. If a reseller has onboarded the client, then the client reaches out to the reseller. So it depends on who has actually acquired the client. But we have a call center. We have about 15 people in a call center, and they are fairly well trained to be able to solve problems on calls as well.
So how many shifts they operate currently?
No, it's the normal 10 to 6, 10 to 7.
One shift, yeah. And you plan to expand product offerings?
I think so.
Is there any demand for them, or you are focusing on one at a time?
No, we will, in the area of finance, we will go deeper. So different types of credit, different types of maybe corporate credit cards, maybe introduce products around insurance. So we will go deeper in that area. Wherever the data can point us, the financial data that we have can point us to, a need that a company has, and we can position it that, this is something that, you might require. Excuse me. This is something that you might require, we will position it.
That's interesting. You see so many opportunities in this ecosystem.
Yeah, so for exporters, we can have products which are more sort of for their requirements, if they want to hedge, for example. For domestic, we can have products around, invoice factoring. We can have products around corporate cards to pay, vendors or something of that nature. There is trade credit insurance, which is coming in, and people are becoming a little bit more aware of it. So we could provide that. So there is, we also provide cash flow forecast in our product. So we can tell you that your burn rate is, say, 6 months, above your runway is 6 months. So, do you want to look for capital? Do you want to look for a loan? Do you want to look for equity? So we can, kind of help predict a few things also.
Interesting. Lots of gaps, niche areas you are trying to fulfill.
Yeah. So our, we would like to get into inventory forecasting as well. Today we are doing only cash flow forecasting. We would like to tell you, which inventory you need to buy. If it's a seasonal product and Diwali is coming, then, you might want to stock up on certain things before that. So that's so that's all about using more artificial intelligence and machine learning. But I think, these are technologies which are available, sooner or later go mainstream, right? Like when mobile phones came in, very few people were using them. And then, there was a point when, again, it was Reliance Infocon then, which came out, and everybody started providing phones to their employees and drivers and everything, right? And, I think something similar will happen. And then, we moved from feature phones to smartphones. And, the smartphone became a device on which you could not only manage, phone calls and messaging, but you could also take photos and, browse the web and make appointments and buy movie tickets. So, we are hoping that our platform kind of becomes a central hub for someone who wants to manage business. And tomorrow, if, you want to integrate into, let's say, a lead management software, then we can show you on your entire lead funnel going all the way down to your invoicing. So, there's a lot you can do, both on both sides, post-transaction and pre-transaction.
Gaurav, you have seen the big world of venture capital.
Yes.
And sharks in the business.
Yeah.
Who have big money and good bandwidth also. And they look at very, very sharp returns. Yes. From that space,
yeah,
you are becoming a hardcore entrepreneur.
Yeah.
Servicing the economy in a highly productive way as an entrepreneur. How do you see that journey so far and moving forward?
Yeah. So, I honestly, when I was, when I used to invest in these very exciting companies and when I used to meet founders, even if I didn't invest in some of their businesses, I used to feel that energy just, rubbing off on me, and it kept growing and growing and growing. It made me sort of finally say that, look, I think that side of the fence is I'm better off being on the other side. I just feel like I want to be in the thick of it rather than being outside and just looking inside, right? I want to build the business in a way that, it makes me feel like I got my hands really dirty. And just the pleasure you derive from building something with your own hands and using, all this experience which you have on a daily basis. You have, very high highs and very low lows in the same day. Okay. And that it's just like the biggest thrill of, no roller coaster can beat that, right? So I wanted that. And, I had just so many ideas. It was, at some point, it was very hard for me to just figure out, what I want to do, because it was just confusing, because I thought, okay, there is a great idea in gaming, or there's a great idea in sports technology or health tech. And, but finance has been my domain. So, like they say, if you want to become successful, do what feels like play to you and work to others. So, for me, this is, I love this. Like every morning, like the expression is, you tap dance to work. So it's like that for me. Even if it's, you're dealing with bad news or attrition or anything, but I just feel like I'm playing a game. I'm enjoying the company of my co-workers and my co-founder, and trying to put all these Lego pieces together. And sometimes some pieces fall down, and then you build it back up, because you don't want to give up. That there is merit in what you are doing. You're not just doing it. There is a higher purpose, right? There's a higher purpose for which you're doing it. So, I find a lot of satisfaction and fulfillment in that. So, that is why I feel like, from venture capital to entrepreneurship, this journey is so much more fulfilling than the previous one. And I mean, venture capital is great as well. I mean, I'm not saying anything against it, but for me, it is this which really excites me. I can't hear you.
It's very, very interesting. It's good to see from your expression a very satisfying experience so far. Entrepreneurship is all about having fire in the belly.
That's right.
Which you have, and being able to go through severe challenges at odd times, maybe 24/7/365. And it's good to see you have come to this stage, and really looking forward to it. I hope it is a game which you mentioned you play and win big.
Thank you so much. Thank you so much.
With a good size of the India growth story.
Yes, I think, the India growth story is probably the most exciting in the world. If you can't be part of this growth story and you cannot push it further, you can't uplift the millions and millions of, hardworking entrepreneurs and give them, a better way of doing things and a shot at being, wealthy and happy. And, then you're really missing out. I think there's, and everyone has a role to play in it, right? Not just me as the owner of this business, as a finance professional, you have your role to play in it, or, the government, of course, has its role. And, you know, uh, there is immense opportunity here, immense hunger in India to succeed. That is why the largest companies in the world have Indian CEOs, because Indians find a way through any kind of adversity. We have seen that even with our cricket team, when they have their backs to the wall, they play their best. So, India is special.
The world talks about sustainability and we talk about sustainable success. The essential ingredients are ethics, excellence, enterprise, equanimity, and with equity. That is very essential, and the biggest rewards go to them, for all stakeholders to get this story. So I hope you integrate all these essential ingredients in the business.
Thank you, Manoj.
So great. Anything else we can discuss on digitization before we move forward to the next excellent topic in the lineup? Any other thoughts? Nilanjan?
No, Manoj, I couldn't find anybody have some comment, neither in the in the chat box or anywhere. So you want me to move to the next topic? Yeah. So I'll move to the next topic, Manoj.
Yeah, certainly. We have a interesting comment.
Sure. So let me share my screen. Okay. So I thought I will just take maybe 15-20 minutes on this topic. This has been a matter of debate for many years, and finally this has come to rest by the recent decisions by the Supreme Court, and it is not the way industry used to believe or read these transactions. So it is important from that aspect. So from the topic, you could gauge we are talking about the implications of indirect taxes on employees being seconded by foreign entities to its Indian subsidiaries or Indian related party entities. So this has always been a debate that whether this will attract service taxes, or in the present situation, will it attract GST? What were the basis for the court to conclude, and the way forward that I see it from a financial reporting perspective. So if I look at that's a brief background. Normally what happens is that the Indian entity enters into agreement with their foreign offices, and they provide back office or technical experienced people seconded to India who stay there for a prescribed period and then they go back. They are largely technical or managerial persons, maybe CFO, chief technology officers, chief risk officers, or senior people from the technical side. They are actually transferred to India, and they reside in India for a brief period of time. Now, what generally happens is that those transferred employees act in accordance with the instructions and directions of the Indian entity. So the Indian entity will tell you what is it that they are supposed to do, and normally they would devote their entire time. Now, from a contractual relationship perspective, the Indian entity would also issue an employment letter to the seconded employee. As far as the employment benefits are concerned, the seconded employee would continue to receive its salary and all other benefits from the foreign group entity. So he or she will not be paid by the Indian entity, but his salary and everything would be paid by the foreign entity. Very interestingly, those seconded employees continue to get social benefits as per the requirement or as per the laws and regulation of that foreign country. Now, from an India perspective, the foreign entity would raise a debit note to Indian entity, and the Indian entity would pay that charge to the foreign exchange. So that's how the entire expense shifts from the foreign entity to the Indian entity. So this is a very common setup which you could find in any large group where the technical experience resides at a group level, and the employees are seconded to India for a brief period of time. What is the bone of contention is that the revenue authorities have always interpreted these kind of a transaction as supply of manpower. So what they believe is that the foreign entity seconding their technical staff to India are actually rendering manpower or recruitment service, and hence the Indian entity, being the recipient of services, are supposed to levy service charge or service tax when they are making the reimbursement of salary and etc. to the foreign entity. So this went on for quite some time. A very common feature across group companies. It went through various layers and levels of courts in India. It went to the sestat level also, and at that point in time, the authority felt that that these are most likely to be an employment contract, and hence they should not be falling within the ambit of service tax. Now, interestingly, what happened is that in May 22, these matters ultimately reached to the door of Supreme Court. And Supreme Court, in its wisdom, has taken a different route. And that's what we are going to discuss today. But what it felt is that these kind of arrangement, though they are very, very contract specific, in substance, they are not employment contracts, and hence they are subjected to service tax levy. So let's see what was the basis for argument by both the sides. So, for example, from an Indian entity perspective, what the Indian entity felt is that this particular agreement is more like an employer-employee relationship, because the seconded employee would come to India, spend his or her time fully. The Indian entity is also giving a letter of employment. So they felt that it is more in the nature of an employer-employee relationship, and hence service tax should not be levied on such charges. What the Indian entities also argue is that these seconded employees report to the designated offices and are accountable to the performance to the Indian entity. The way the salary is disbursed by the foreign entity is merely a convenience matter. It is nothing to do with the crux of the agreement. And Supreme Court in their previous judgments have also held that expenses reimbursed or salary reimbursed are not to be considered for service tax. Now, on the other side, the revenue authorities just argued in a different way. They felt that this contract in substance is a contract for supply of service. So where people are actually being supplied to the Indian entity, and hence they should be subjected to service tax levy. One of the key arguments which the revenue authorities held is that the agreement specifically stated that the secondment was a limited duration, and at this particular point in time, the Indian entity has no role in whatsoever in selecting the employee or in terminating the agreement. If they want to seize the employee, they will go back to the parent or the foreign entity, and then they will request for a new set of secondi. Whether it will be accepted or not, it will ultimately be decided by the foreign entity. Indian entity has no role. Also, the Indian entity is not able to impose sanctions. For example, if they want to cut the salary of the seconded employees, they would not be permitted to. Again, the real reason what the revenue authorities felt of the secondment was to ensure that expertise was utilized and to ensure that the quality of services are maintained. So in a nutshell, the revenue authorities felt that it is a supply of manpower, whereas the Indian authorities felt it is more in the nature of an employer-employee relationship. Let's see what the Supreme Court has to say. The Supreme Court obviously felt that the crux of the matter is that whether it is a contract of service or a contract for service. Contract of service would mean it is a manpower service, and hence the Indian entity receiving the service would be required to levy service charge, service tax. If it is a contract for service, then it is employment contract and it will be outside the ambit of service taxes. The Supreme Court also reiterated that in these kind of a matter, what the courts have always felt is that they should apply the substance over form test, which means look at the agreements and the transaction holistically and look at the substance of the transaction rather than the legal form. One of the very important argument which Supreme Court cited is that it is doubtful whether the seconded employees would actually come to India if they are deprived of the social benefits of their country of origin. So if you are not giving those security benefits on a continuous basis, it is more likely that those employees will not avail the option of coming to India. So this Supreme Court found to be a very important feature which was not considered by the other levels of adjudicating authority. Again, the agreement which the Indian entity had with the employee, it nowhere states that they are the employee of the Indian entity. Is to always say that they are the employee of the foreign entity. In substance, the Supreme Court also felt that this secondment is a part of a global policy where there is a pool of expert resources maintained by the global offices, and these global offices loan their staff on a temporary basis across the globe. The Supreme Court also observed that the salary packages and allowances are all expressed in foreign currency. These also include special India benefits. For example, there are hardship allowances and there are other allowances which help the seconded employees to settle down in India and adjust to the additional cost that they would incur. Net, what the Supreme Court felt is that the overall the effect of the agreement clearly states that these employees are highly expert and specialized in their own field, and these kind of agreement in substance are in the nature of manpower supply services, and hence they should be subjected to service tax. So it's a complete U-turn compared to other lower levels of adjudicating authorities. Now, Supreme Court being Supreme Court, this would continue. This would now be the law of the land, unless the Parliament or any other act supersede this judgment. So, even though this particular judgment appears to be more from a tax or from an indirect tax angle, what I felt is that there could be certain aspects which might affect my financial reporting, and I have put them across in this particular slide. So the first question is obviously whether this judgment would equally be valid in the GST regime. What I could gather from various expert voices is that, considering that the GST framework is somehow influenced by the service tax regime, the judgment of the Supreme Court, which is under the service tax framework, would continue to be relevant in the GST framework as well. So what those experts felt, that this similar interpretation would continue to be followed when you're assessing the GST liability. Next, very interesting topic is that will this judgment lead to a retrospective application? Because ultimately this is not a new law which is being enacted, but an interpretation of the existing law. So I think similarly we have observed cases where the Supreme Court had read the definition of wages in case of provident fund, and there was a debate on this similar side. What I can only tell you that from a legal standpoint, they do apply retrospectively because it is an interpretation of the existing framework. However, I have never seen revenue authorities questioning or going back or digging up old cases. So this would be a wait and watch situation to see how things pan out. Now, as far as the assessments which are open or where there are demands, it is likely that these demands and assessments would be revised in the light of the Supreme Court judgment, and you would expect the show cause notices or demand orders coming from the revenue authorities. What I would also like to caution here is that these judgments are based on the facts and circumstances of the matter. So even though the case of the background case which I've highlighted is more generic, but as a word of caution, each and every one of us dealing with this situation would need to reassess their own situation and then take a considered view. Similarly, because of the probability of assessments being reopened or recomputed, there would be an implication on making a provision or disclosing this matter as a contingent liability in the financial statements. What would also get affected is the auditors reporting on CARO, which talks about the regularity in payment of statutory dues. So that's what I had in my mind on this particular topic. Happy to hear if there are any questions or any experiences if somebody would like to share.
This is an interesting case, but now such a specialized knowledge, they talked about global companies and also secondments and hardships. Generally, oil companies, exploration, drilling, construction contracts, metros, high technology areas, isn't it? Very high salaries.
Yeah.
And employees highly skilled. They are rotated by global companies from country to country, depending on projects they get it, right?
Yeah.
And a huge number of employees also, because infra sector space and all exploration space is also growing at exponential level, and they can't have such people on a permanent basis.
Yeah. So I think if we are engaging with our clients or having discussions where we have these kind of a secondment agreements, we should be applying caution. And this particular judgment may not have been hogging the media limelight, but it is, in my experience, these kind of a situations may not be very common, but they are not rare also, right? So as you mentioned, Manoj, the sectors like oil and gas, I have seen in IT, metro, especially, all those high tech entities do have employees being seconded. And instead of looking for talent outside, they would kind of leverage the internal talent pool.
So one measure of tax planning will be ensure such agreements and paying GST, service tax, etc.
Yeah.
Take them on local payroll, so there is employment-employee relationship directly.
Yeah.
But that may not work for the employee, because then they don't get the seniority benefits of global companies.
Yeah. So, well, that's what I had.
So very interesting, and there are opportunities for planning, and these are very, very important areas for companies on high growth path and using global and specialized talent, and also opportunities for planning on savings, whether through tax or through employees or through overall packages. There are good opportunities for structuring their agreements.
Sure.
Any other issues in the open house? Anybody would like to have any share any thoughts?
Sir, can I please ask a question?
Yeah, sure. Put your video on, please. Mention about yourself and ask any question.
Yeah. Sir, I'm Krishnan, Chartered Accountant from Chennai.
Yeah, can you just put your video on? We heard you earlier also.
It is on, sir, already. It's switched on.
No, but we can't see you, Krishnan. It's all black.
That's switched it on, actually.
Your camera might be covered.
Is it okay now?
No, we still can't see you.
Okay, maybe some issue with my camera. If you could excuse me, I will try to fix it. Second. I just go ahead and ask you the question. So, sir, in this case, basically, it's Supreme Court. The final decision is it's a manpower supply or recruitment agency service, and the Indian group company should be remitting the service tax on reverse charge, right?
Yeah.
Okay. So I just thought there are some companies in India which are also offering like interim CFO kind of services to the clients. And there is some other third-party consultant who has tied up with these sort of virtual CFO providing companies. And supposing some person as an independent accounting professional or something, he gets a lead and then he is entering into a contract with this company, say A, company A. And there is a company B. And there is a company C. Okay. And I am Mr. X individual. Now, I am Mr. X individual. I am entering into contract with, say, company A, through which I am actually getting the contract to provide an interim CFO service for a company C. Now, this company C is actually engaging company B to provide the interim CFO services or virtual CFO services till such time it recruits a full-time CFO. And company A and company B have a contract with them. But so what happens? I am getting the individual. Mr. X is getting the signing the letter of offer or consulting offer with company A to be seconded to company B to provide services to company C as an interim CFO. But I don't get any letter from the company B as an individual. Only company A give me the letter, consulting letter. And I am deployed in the company C, which is a private limited company or something. And it's a fixed contract. They mention it as a fixed contract with, say, lock-in of 6 months. And then if in case you want to quit or something, then for some certain specific reasons, you can quit with a 1 month notice or something like that. So in this type of a contract, how does this work actually? Because the company B will be billing to the company C and claiming its whatever is the agreed professional fee. So company B will be having a contract or agreement with the company C. They will be having the contract and they will be billing to company C with GST and getting the amount. Now this company B who has given this contract or signed the letter of offer with the individual, he will be also billing to the company B. And then he will be paying to the individual. So basically he is like a recruitment agency or something only. That actually the individual has to supposed to enter into contract with company B, but for some reason this company A want to retain this individual on his payroll or something like that.
So Krishnan, without going into too much detail and A, B, C, what I would like to highlight is that in this particular fact pattern which we discussed, there was some element of employer-employee relationship between the individual who is actually providing service and the recipient of the service, right, which is the Indian entity. What I understood from your case is that there is no agreement or a letter between the interim CFO or CEO and the recipient of the service, right? It is happening through multiple layers, right? A is appointing B is appointing C, and so on.
Correct.
So I think in your fact pattern, it is more like a manpower service because you are actually supplying people, right? There is no element of employer-employee relationship, right? Here, if I use your fact pattern in the fact pattern which we just discussed, if there was no employer-employee relationship between the Indian entity and the seconded foreign employee, most likely even the Indian entity would not have gone to that level, right? But the very fact that they had an employer-employee agreement in place, they felt that the situation was different. I think in your case, I would tend to believe that it is more of an supply of manpower, and it is not an employer-employee kind of a contract.
Right.
Yeah.
Got it. Thank you.
Yeah. Well, I think, Manoj, that's all we had. I couldn't see any other questions or doubts in the chat box.
No, very interesting and great session.
Sorry, sir. What is the name of this case law, sir? This decided by Supreme Court. If you could just highlight the name, citation.
I can ping that because it's a long name. So maybe I can ping it to you. One moment. Hmm. Just give me one moment.
Yeah.
So I've pinged it, Krishnan, on the chat box. You can get it from there. I can also give you a link of the Supreme Court judgment, and then maybe you can read that as well. Yeah.
Thank you.
Thank you. Thank you. Yep. So Manoj, if there is no other thing lined up, maybe you can give your closing comments and then we can close.
A wonderful session. Nilanjan, can you close the session?
Yeah.
Your
Sure.
concluding remarks,
Yeah.
as usual.
No, thank you. I think it was interesting to hear different voices, especially Gaurav's perspective on the emerging trend on digitization. So thank you from our side, and happy to hear you in our next sessions as well. Thank you.